Hello, welcome to Late Night Stocks. Today, our focus is 3 vegan food companies. Very Good Food Company continues its bearish trend. TTCF reversed its trend and hitting $24. Beyond Meat making spikes with new deals. Which vegan stock to buy? Maybe all of them. First, I will talk about the main challenges in vegan food industry and its growth. Then, analyzing each stock, checking the latest news, I will make a price prediction mentioning entry points. I will show you my price targets for each year, 2021, 22 and 23. Let's get into the video. Vegan food industry market size was $17 billion in 2020, and it is expected that it will reach above $30 billion by 2026. That corresponds to compound growth of 11.4% year over year. Some companies like Very Good Food and TTCF can beat this growth, of course, and bring average 30+% growth each year. However, these companies are facing difficulties since coronavirus breakout. They are using similar ingredients like corn and soybeans. For example, we can track the price of the corn from this index. As you see, it was in a decrease since 5 years. There were no volatility and it was easy to predict. After March 2020, it increased to 700, which is 2x less than a year. What would you do if your raw products were increasing and you cannot raise the prices because of competition? It is hard to manage. They try to solve this problem with fixed price contracts, securing the price for the next years. It is similar in the soybean. Most of the vegan products has soybean. After 20% decrease over 5 years, it jumped to levels 1000. Now we see a decrease that can relieve these vegan food companies. If both corn and soybean come to levels before coronavirus, they can boost their revenues and profits. Let's start with Very Good Food Company. After Q3 2020 earnings, as shown in the blue line in the graph, the stock price hit $7.40 due to announcements of these new facilities. Then hype is ended and people realize that the revenue will come in 2022 or 2023. It has decreased more than 50% since then. Stock price is now $3.18 with $310 million market cap. Will it keep dropping? Is this the bottom? Before I talk about the stock price, let's check the recent news first. Very Good Food Company partners with Vancouver's premier meal kit service company, VRYYF. The partnership with VRYYF marks Very Good Food's entry to food service and meal kit space. The global market of meal kit services was valued at $10 billion in 2020, and it is expected to expand at a compound annual growth rate of 13% next 7 years. Each week, customers receive these pre-cut and pre-portioned ingredients delivered in reusable. The Very Good Food Burger, Smoking Burger and Smoking Bangers will be part of this Fresh Preps add-on menu. It will be marketed with along these barbecue kits and other summer grilling campaigns. In addition to that, Very Good Food products will be available to US customers through Amazon store in these days. They are also making deals with stores to increase their revenue. The world's largest plant-based restaurant franchise with over 40 locations across North America. I mean, the world's largest looks like an exaggeration. They have only 40 locations. The Very Good Food butchers products available to its customers to purchase from these in-store freezers. However, starting this summer, they will be in only 8 Copper Branch locations, so not 40. In addition to that deal, they announced a new wholesale distribution partnership with Horizon Grocery and Wellness. So this company will carry Very Good Food products to its 184 retail stores across Canada. The Very Good Burger, Smoking Bangers, Taco Stuffer, Very Good Pepperoni and Very Good Dog will be in these retail stores starting from August 1st. With this deal, they will be in 573 stores and 2,400 distribution points. They are proud of 83% increase, but it is slow in my opinion. They are still local. They need to multiply these distribution points. When we compare to TTCF, they have 10 to 20x distribution points. That's why they have more revenue and they are more close to profitability. When we look at the stock price, looks like they hit the bottom there twice. They can hit there again, but I doubt that they can go lower than that. So $2.9 or 3.5 Canadian dollars looks like bottom. We came to prices before hype. So if you want to buy the stock, You can start buying in small portions so that you can lower your price average. Of course, do your own diligence and decide for yourself. Here's my price targets for next 3 years. If they bring these revenues, they can reach these price targets. They start producing with half capacity of Rupert's facility. Once fully operative, this facility can bring $120 million annually. If they bring $20 million revenue this year, they may back to levels to $4. After fully operative Rupert facility, they can hit $10 in 2022. With additional capacity from Patterson facility, they can bring $200 million revenue, and that can make the stock price $22 at the end of 2023. So if you are invested in the company, you should be patient and wait at least till Q1 2022. Let's continue with TTCF. TTCF's stock price is following this S-curve in the long term. They had a huge run after Q1 earnings on 12th of May. Stock price hit $24. After correction, we are now at $21 stock price with $1.7 billion market cap. I really like TTCF not because of Jeremy financial education, but because of their diverse product portfolio. In coronavirus pandemic, most of the food companies didn't focus on innovation, but TTCF didn't stop and they come up with new products. They have frozen products unlike Beyond Meat and Very Good Food Company. Although it is more expensive to store, you can store it very long time without a time pressure. It is very impressive to see they can produce this variety of products in few lines. The ability to manage this complexity and deliver it to 30-40,000 distribution points is very promising for the company. As you see, their total addressable market is huge. Pizza, dessert, meat, prep foods, and so on. I was listening to one of the conference call last week, and they said they are now entering to snack category, another product to reach more customers. Beyond Meat may also do the same with Pepsi partnership. In this conference call, they also said that their main focus is in US, but they have also entered Mexico and UK. They once more underlined that they have now $500 million revenue capacity, but they plan to reach $300 million revenue in 2022 and $1 billion revenue in 2026. This means each year they need to grow their revenues at least 35%. We will see if they can manage. Let's talk about the stock price. As I showed you before, the stock price is in the short-term bullish trend, and we see a reversal signal from RSI indicator in this daily chart. If we see a correction after hitting $22, below $20 looks like a good entry point. If there is no correction, after $22, we may hit $26 stock price. When we check the stock price fundamentally with the price to sales ratios to evaluate its valuation, here is my price targets for next 3 years. I'm not investment advisor, please do your own diligence. If they bring these revenues, they may reach these price targets in my opinion. They have already $500 million revenue capacity, so there's no problem for next 3 years. They only need to find new customers. They made $148 million revenue in 2020, and it is expected to reach $239 million in 2021. Fulfilling these estimates, the stock price can hit $30 by the end of 2021. If they reach their $300 million revenue target in 2022, we may see $40 stock price. Keeping this level of growth can bring $450 million revenue in 2023, and that can make the stock price $55. So if you are already invested in the company, you can lower your price average, or you can be just patient till end of 2021. If you are new to this company, I would enter around $18 to $20. It is your decision, of course. Let's continue with Beyond Meat. Beyond Meat was following this bullish channel and was in a good track, but it broke after this disappointing Q1 earnings. The stock price is now at $147 with $9.2 billion market cap. One of the reasons of this recent decline was Dunkin' Donuts. Dunkin' Donuts locations stopped offering Beyond Meat breakfast sandwich. Beyond Sausage sandwich was sold earlier 9,000 locations of this restaurant chain. So now this sandwich will be available at only some hundreds of restaurants. This is a minus point for management. They were growing fast, but they couldn't handle this scale up and failed bringing products can form loyal customers. Apart from this, soft food service sales have been a concern for Beyond Meat. This was also evident in the first quarter of 2021, wherein sales from this channel declined 26% in the United States and 44% internationally. But at the same time, they are also making new deals. The company recently expanded the presence of its Beyond Meat bowls across 2,100 stores of Walmart. The other products like Beyond Sausage Hot Italian and Cookout Classics will be available also across Walmart stores. In addition to Walmart, the company is expanding its distribution points by partnering companies like the Kroger Joe and Whole Foods Market. Early in this year, the company teamed up with Yum Brands to develop exclusive plant-based products, and the company has also partnered with Pepsi. This venture will develop, produce, and market plant-based protein snacks and beverages. But when will we see the products? When will revenue come from these new deals? Next year? 2023? I don't know. But it is expected that Beyond Meat will reach $1 billion revenue by 2023. Although they lost the deal with Dunkin' Donuts, they made a new deal with DoorDash. DoorDash is partnering with Beyond Meat to offer 4th of July plant-based grilling kits for Americans across the country. So DoorDash will be providing these grilling kits on their platform called DashMart for $15. You can say, hold on, what is DashMart? DashMart is a new platform from DoorDash. They will deliver the products like snacks, beverages, and groceries. So this is a marketing campaign for both Beyond Meat and DashMart. As you see in this photo, there will be grilling meats, aprons, grilling tools, a bottle opener alongside this Beyond Burger. Let's talk about the stock price. Here's my price target for next 3 years. I am not investment advisor, please do your own research. If they bring these revenues, they may easily hit these price targets. To reach these levels, they need to introduce new products from these partnerships. They made $400 million revenue in 2020, and it is expected to reach $560 million revenue in 2021. With this revenue, they can hit $180 by the end of 2021. If they can reach their $860 million revenue by 2022, we may see $230 price again. Keeping this level of growth can bring $1 billion plus revenue in 2023, and that can make the stock price $250. When we compare to Very Good Food Company and Tattooed Chef, they have less upside potential in my opinion. So if you want to be part of this company, you need to enter in a very good point like $100 to $120, so you can 2x your money in 3 years. So these were my price targets. If you want to know more about the companies and in-depth analysis, you can check our vegan food stock playlist. What is your price target? Which vegan food stock can perform best in 3 years? Let me see your answers in comment down below. Don't forget to like the video and subscribe our channel.